Trade finance is a long-established financial product used to support the business activities of importers and exporters globally. The function of trade finance is to reduce the risk of non-payment to the exporter and to guarantee the shipment of goods to the importer. The most common forms of trade finance instruments are documentary collections and the issuance of letters of credits. Both instruments can extend to either bilateral or syndicated loans with a tenor ranging from 60 days to a 24-month period. The tenor is dependent on the nature of the underlying goods. Due to the scarcity of foreign currency in Africa, local banks often turn to international lenders for financing when they need access to US dollars, euros, sterling or yen to support the trade activities of the bank and their corporate customers. Due to maximized internal limits, at times traditional foreign lenders reduce their lending capacity to Africa, which often creates a gap in the foreign borrowing market. Atf Sa is a trade finance fund incorporated in Luxembourg. The aim of Atf Sa is to fill the liquidity gap by participating alongside traditional lenders on their lending activities to African banks. When international lenders extend financing to banks in Africa, they often have recourse to risk-sharing platforms, enabling banks to invite other traditional and non-traditional financiers, such as Atf Sa, to participate in their transactions. To facilitate the sharing of risk between lenders, the Bankers Association for Finance and Trade and the Loan Market Association have a standard set of documentation for lenders to use when sharing the risk of loans, particularly loans of a trade finance nature. The key reasons why international banks distribute their trade assets is to increase their internal credit capacity, reduce their risk-weighted assets, improve their capital ratios, and mitigate the obligor's risk. The purpose of Atf Sa is to enable non-bank institutions to have access to a trade asset class which for a long time was an exclusive product within the banks. An advantage to subscribers to this vehicle is that investors have access to the financial reward whilst mitigating the operational risk and control. Trade assets have low default rates, as demonstrated by the International Chamber of Commerce's annual reporting was less than 0.1% in 2017. Atf Sa is managed by both Atf Sa, an alternative investment fund manager approved by the AMF, and Africa Trade Finance Limited, authorized and regulated by the FCA. Together, ATF and Atf share a wealth of experience and a solid track record of working with African trade finance participating banks. A further advantage is that our participation model excludes any operational trade documentary risk. We also require all counterparts to retain a portion of the risk in the transaction to make sure they have a skin in the game. This ensures that the best possible controls are implemented by the participating banks. The WTO indicates that every $1 of trade financing generates circa 0.3% of GDP growth in Africa. Be part of this exciting journey and make an impact in driving Africa's trade growth and increased economic expansion. Atf Sa, providing liquidity for trade in Africa.